Hello, everybody. Now, let me just say this right at the top. It's been said that 2026 is going to shock the absolute living daylights out of hundreds of millions of people. Every single signal we keep getting, every institutional breadcrumb, every regulatory whisper, every acquisition, every corporate movement, it all points in one direction. Something massive is building under the surface, and most people won't see it until it's already detonating in front of their faces. We cannot go a single week without getting new headlines about the Federal Reserve preparing to lower rates. We can't escape the wave of crypto acquisitions. I mean, companies swallowing entire companies, billion-dollar deals that barely get any mainstream coverage. We keep hearing about what cryptocurrencies these institutions are buying. We keep hearing about tokenization, custody, treasuries, long-term strategies. And if you missed this part of the conversation, the money that entered the market in 2025 is expected, not guaranteed, but expected to triple next year. The crypto market is expected to grind higher and higher, basically forever. And underneath all of that, there's a silent consolidation happening. Big players are absorbing everything, not just Bitcoin, not just Ethereum. XRP is now stepping into that category. If you're serious about getting ahead of this next major financial shift, you need to be inside XRP Insider's elite. You'll get exclusive XRP alerts, millionaire mindset systems, and the exact strategies smart money is using before the public ever sees them. It's all in the video description, and you can use code millionaire for 10% off. Now let's keep moving because what's happening behind the scenes with XRP right now is not small. Rumors have been swirling for over a year about Ripple potentially doing an XRP buyback, similar to how a company buys back its own stock. Why? Confidence. When a company buys back huge amounts of its own asset, they're signaling that they know something most people don't. They know where the future is going. They know supply is tightening. They know demand is rising. They know that the asset they issued is about to become significantly more valuable. The last time Ripple even flirted with this idea, the community went wild. And that's exactly why the escrow system exists today. Too much chaos, too little stability, too many eyeballs. But that hasn't stopped the whispers. What has made the news, however, is even more interesting. Ripple has begun acquiring companies at a pace we have never seen from them before. I'm talking about 5, 6, 7 acquisitions, multi-billion-dollar deals, and if you zoom out, the pattern becomes obvious. They're not just acquiring random companies. They're building out something that looks eerily similar to a crypto version of BlackRock CK. I know that may sound dramatic, but when you look at the acquisition side by side, it becomes undeniable. They're assembling the infrastructure, the custody rails, the treasury frameworks, the liquidity pipelines, the enterprise architecture. It's like they're quietly preparing to become the gravitational center of the entire digital asset ecosystem as we enter the late 2020s. And that ties into a headline most people slept on. 9 companies, not 2, not 3, but 9, announced that they were working on XRP treasury strategies. Think about that. Think about how large a treasury position needs to be for it to even make the news. These aren't mom and pop shops. These are institutional level players preparing to accumulate 50 million, 100 million, maybe even more worth of XRP. And that was before the next headline dropped. A company named Evernorth publicly declaring they are building a $1 billion XRP treasury backed by SBI, Japan's massive banking consortium, Pana Capital, Kraken, Ripple co-founders GSR, and a handful of other names that absolutely do not move money unless they know exactly what they're doing. $1 billion. Just let that sit for a second because that is not retail. That is not speculation. That is not guesswork. That is not gambling. That is strategic accumulation. That is positioning. And that is how supply shocks begin. Now, here's where it gets even more interesting, because if you've been paying attention to Ethereum and Bitcoin, then you already know where this is heading. Staking, passive income, yield generation, free money. Companies have realized they can buy huge amounts of Ethereum and literally earn passive income on their balance sheets just for staking it. Same thing is forming around Bitcoin through new protocols and emerging infrastructure, and this will only become more standardized over the next few years. But XRP has historically lacked a direct institutional-grade yield mechanism until now. Flare Network is ramping up in a way most people are completely ignoring. And if Flare becomes the standard avenue for staking XRP to generate passive income, and early indicators are strongly pointing in that direction, then XRP becomes something fundamentally different than it has ever been before. It becomes an asset that institutions can hold and earn yield on. And the moment that happens, the floodgates open because CFOs love one thing above all else: predictable passive income. They love being able to say, we hold $7 billion in digital assets and made $114 million this year doing absolutely nothing. It increases valuations. It strengthens balance sheets. It makes shareholders happy, and it forces other institutions to copy them. Combine that with the growing expectation that XRP could reach the $10 to $15 range in the next aggressive cycle, and you get the makings of a perfect storm. This is not hype, but structural demand. It is not speculation, but a developing treasury strategy. It is real institutional positioning. And then there's the monster acquisition Ripple made recently. G Treasury bought for a staggering $1 billion. This is the piece that puts the entire puzzle together. Because once you control custody, treasuries, enterprise liquidity, and yield generation frameworks, you become indispensable. If crypto is expected and heavily forecasted to 10 to 15 times 2029 or 2030, then the companies holding and securing those assets will become trillion-dollar giants. Ripple knows this, and they're positioning themselves not to participate in that future, but to own it. And that leads us straight into the next major development that almost no one has connected yet: the supply dynamics. Because for all the noise, all the speculation, all the debates on social media, the truth is incredibly simple. Supply on exchanges is not infinite. It has been shrinking every single year. And the myth that there will always be some magically endless amount of XRP sitting there waiting to be bought is just that, a myth. We have hard data showing that exchange liquidity for major assets keeps drying up as institutional accumulation accelerates. It happened with Bitcoin before its ETF. It happened with Ethereum after the staking boom. And XRP is now entering that same zone, only with a twist. Institutions are trying to pre-position themselves before regulatory clarity and before another run begins. The average retail investor still doesn't understand this dynamic because they're used to thinking in terms of charts and quick price moves. Institutions don't think that way. They accumulate slowly, quietly, consistently. They don't chase green candles. They don't FOMO into breakouts. They accumulate during the boring periods like right now when nobody's paying attention. That's why the Evernorth announcement matters. That's why the Treasury accumulation matters. Because if these companies are building multi-million or billion-dollar XRP treasuries, they're not doing it at the top of a bull run. They're doing it during the quiet phase, the phase where supply is adequate, retail is distracted, and sentiment is lukewarm. This is where structural moves happen, not emotional ones. And once supply gets tightened at the institutional level, the impact on retail becomes massive. If you're a company planning to acquire 1 billion worth of XRP, you're not buying it on a retail exchange. You're sourcing it from OTC desks, vaulted supply, long-term holders, and private liquidity providers. That supply is finite, and once it's locked into a treasury, it's gone. It's not coming back onto the market for years. That's how supply crunches form. And while all of this happens, Ripple is strategically building out every major layer of infrastructure needed for global scale adoption. The boring stuff nobody pays attention to until it's already in motion. Everyone loves the price predictions and the flashy headlines, but the real power is in the infrastructure. Payment messaging systems, real-time settlement rails, CBDC pilots, liquidity hubs, compliance frameworks, custody systems, treasury tooling, and regulatory partnerships. These things are not exciting to the average investor, but they are exactly what institutions look for before they deploy billions. And this is where the story gets more interesting, because institutions aren't just looking for assets that go up. If they only cared about price appreciation, they could just buy equities. What they want is efficiency, cost savings, faster settlement, lower operational risk, reduced friction, reduced dependence on outdated systems. XRP, in a very real sense, is one of the few digital assets that solves those problems right now, not hypothetically in the future. That's why the partnerships matter. That's why the acquisitions matter. That's why the regulatory progress matters. It's all converging toward a system where XRP becomes part of the financial plumbing, not a speculative token floating in the wind. And if you zoom out just slightly more, you'll notice something else. The global macro environment is primed for disruption. The Federal Reserve lowering rates is not just an economic shift, it's a liquidity shift. It means money is going to start pouring into risk assets again, especially into sectors with high growth potential and low current penetration. Crypto fits that perfectly. Tokenization fits that perfectly. Digital treasuries fit that perfectly. And Ripple is building infrastructure to sit directly in the middle of that flow. Look at what's happening around tokenization alone. Every major financial institution is preparing for a future where real-world assets live on blockchain rails. Whether it's bonds, treasuries, real estate, commodities, or even equities, tokenization lowers costs, increases transparency, and allows fractionalized global liquidity. XRP fits into this model in a way that is still massively undervalued because settlement assets for tokenized markets need to be fast, inexpensive, scalable, and bridgeable across networks. XRP checks every box. Ethereum may host the tokenized assets. Bitcoin may serve as collateral in certain structures, but something has to move the money. Something has to settle the value. Something has to bridge the networks and the sovereign rails. That's why XRP is back in conversations among institutional risk teams and treasury committees. They aren't talking about memes. They aren't talking about trends. They're talking about operational efficiency and financial infrastructure. And then we have to talk about the regulatory climate because this is something that has shifted dramatically in the last 2 years. XRP has gone from being treated like a regulatory question mark to becoming one of the most legally clarified high-cap digital assets in the United States. That is huge. It removes uncertainty. It reduces perceived risk. It allows corporations to create actual long-term strategies instead of short-term trading positions. It doesn't guarantee price action, but it guarantees stability. And stability is exactly what institutions need before they move serious capital. This regulatory foundation is the single biggest difference between XRP in the mid-2020s and XRP in the early 2020s. It opens the door for everything else. Yield programs, treasury holdings, corporate balance sheet integration, tokenization rails, cross-border payment adoption, and enterprise partnerships. The puzzle pieces that were missing 4 years ago are now locking into place one by one. Now, combine all of that with Ripple transforming into a full-scale global infrastructure giant. The G Treasury acquisition is not just a flex, it's strategic positioning. If Ripple controls both liquidity and custody at the enterprise level, they become unavoidable. You cannot build a global digital asset financial system without the companies that provide the underlying rails. And Ripple is putting themselves directly into that position. This is not financial advice. Once XRP becomes a treasury asset, once it becomes a yield-generating asset, once it becomes part of cross-border settlement infrastructure, the next logical leap is something far bigger. It becomes systemically important. Not in a regulatory sense yet, but in a functional sense. Once enough institutions rely on an asset to move money, settle value, manage liquidity, and store long-term reserves, that asset becomes part of the backbone of financial architecture. Think about it this way. The US dollar didn't become dominant because people liked the picture on the front. It became dominant because institutions, governments, and trade networks relied on it to function. Once the dollar became the easiest, fastest, and most trusted settlement mechanism, everything else aligned around it. Now imagine a digital version of that, but without borders, without banking hours, without wire fees, and without delays. XRP isn't trying to replace currency. It's trying to replace friction. And friction is the most expensive part of global finance. The more these companies integrate XRP into their treasury models, the more liquidity networks rely on it, the more CBDC pilot systems test it, the more tokenization platforms plug into it, the more likely we are to see it evolve from an alternative asset into a core settlement layer. That's where this entire decade is heading. Not speculation, not memes, infrastructure. And the timing is absolutely insane because macro conditions everywhere are converging. Governments are drowning in debt. Banks are struggling with outdated rails. Cross-border payments are slow, expensive, and vulnerable. Interest rates shifting downward create massive liquidity waves. Meanwhile, institutions everywhere are under pressure to modernize. They're under pressure to find efficiencies. They're under pressure to cut costs, improve speed, and move into the digital future. That's why you're seeing treasury desks experiment with blockchain-based systems. That's why banks are integrating tokenized assets. That's why corporations are building internal digital asset strategies quietly behind the scenes. In the early 2020s, all of this felt theoretical. It was ideas, pilots, announcements, hints, prototypes, white papers. But here in the mid 2020s, it's real, it's happening. And XRP is no longer a speculative question mark floating around the crypto industry. It's becoming a legitimate piece of the financial modernization wave. And what almost nobody realizes, because nobody wants to sit back and look at the big picture, is that Ripple is building something that might end up being the first end-to-end digital liquidity ecosystem on the planet. They're aiming to control custody, settlement, treasury operations, yield infrastructure, liquidity management, tokenization rails, compliance tooling, institutional onboarding. They're building something far bigger than payments. They're building a financial operating system. Most people are still thinking of XRP like the crypto that moves money internationally. But Ripple is thinking of XRP as something much bigger, the settlement core that ties together global liquidity, tokenized markets, corporate treasuries, international remittances, banking rails, and enterprise-grade financial infrastructure. That's why the G-Treasury acquisition is so important. That's why the institutional backing of Evernorth is so important. That's why the 9 treasury companies building XRP positions are so important. And that's why the supply drying up on exchanges is so important, because these moves aren't speculative. They're architectural. They're foundation level changes. Now, here's the part people always underestimate. Once something becomes integrated into enough enterprise systems, it becomes extremely difficult to replace. That's why banks still rely on SWF, even though everyone knows it's outdated. That's why global settlement networks take decades to change. That's why institutions pick infrastructure partners very carefully, because once they're locked in, switching is expensive. If Ripple becomes the default digital liquidity provider for treasuries, custody, tokenization, and international settlement, then the world doesn't just use XRP. The world relies on it. This is the part of the cycle people look back on in 5 years and say, I can't believe how obvious it was. But in real time, it always looks confusing, boring, slow, and fragmented. That's the nature of foundational shifts. They don't look exciting when they're happening. They look inevitable in hindsight. Another factor worth watching is the emerging liquidity corridors that Ripple has been cultivating behind the scenes. These corridors are not just on-ramps, they're strategic highways that reroute the flow of global value. And once enough liquidity moves through them, the asset at the center of those flows becomes indispensable. You can think of it like building highways before cities. The highways themselves are what enable the cities to grow. XRP is becoming the digital settlement highway, and institutions are quietly building the cities around it. Now add the layer of tokenization, the biggest financial migration since the internet, and the picture becomes even clearer. Tokenized treasuries, tokenized real estate, tokenized commodities, tokenized equities, all of these need a settlement layer. And the one thing every major institution agrees on is that settlement needs to be fast, cheap, and liquid. XRP is engineered for that exact purpose. The more these tokenized markets emerge, the more XRP sits directly in the center of them. When you stack all of this together, shrinking supply, expanding institutional demand, emerging yield, enterprise integration, regulatory clarity, liquidity corridors, acquisitions, treasury formations, the setup for the late 2020s becomes incredibly hard to ignore, not because of hype, but because of architecture. And that's why so many people are quietly preparing now. Not because they're guessing, but because the writing is already on the wall. And if you understand how early we still are, then you already know the smartest move you can make is positioning yourself with the right information, the right strategy, and the right tools. Because the window where retail has an edge will not stay open for long. If you're serious about staying ahead of this massive shift, you need to join the XRP Insiders Elite. You'll unlock weekly insider alerts, the Millionaire Mindset framework for generational wealth, and full access to every premium resource, all built to help you move like the smartest money in the space. It's in the video description below, and you can use code millionaire for 10%.